let us discuss what is government budget and the economy. What is the role of budget? What are the meaning? What are the objective? And what are the features of budget? Right. As you know that you have studied in last videos, that is what is fiscal policies, that how does government generate revenue is by taxes, right? And expenditure also government has in building road, dams, all such kind of things you have seen in fiscal policy. One step further we will move, we will discuss what is budget and meaning and features, right? In the modern world, every government aim to maximize of the welfare of its country. It requires a number of infrastructural, economic and welfare activities. All this activity requires huge expenditure to be incurred. This requires appropriate planning policy. Budget helps in planning and framing the policies. Budget is just a statement which is estimating what can be the receipts and what can be the payment. What does government generate revenue and what are the expenditures made by it, and it is prepared annually, as you know, and it is a constitutional requirement and to be presented before parliament in the month of February. You have seen in TV also many times that the budget gets passed or budget is made available to the public. Now let us understand from where this budget came, like what is the meaning. The term budget is derived from a French word bourgeois, which means a leather bag or a wallet. It is a statement of financial plan of a government. It is the financial planning of a government in terms of what revenue the government can generate and what are the expenditure incurred by the government. A budget is a document containing a preliminary approved plan of public revenue and expenditure. What kind of an revenue the government will get from the public. It is just a plan, it is not an actual statement, it is just an estimate. In general, the government budget is an annual statement showing item wise estimates of receipts and expenditure during an fiscal year. Fiscal year means financial year. The receipts and the expenditure shown in the budget are not the actual figures but only the estimate values of for the coming year. The fiscal year is considered from 1st April to 31st March, right? It is a planning that revenue and expenditure are planned accordingly by the government. Budget impacts the economy through aggregate fiscal discipline and resource allocation as well. Now let us understand what are the objectives of budget. Government prepares the budget for fulfilling certain objectives. These objectives are direct outcome of the government economic, social and political policies. And the various objective of government budgets are: number one, reallocation of resources. Through the budgetary policy, the government aims to reallocate resources in accordance with the economic and social priority in the country. How and where the government should allocate its resource in order to earn maximum satisfaction of every rupee invested. It refers to the change in the direction of resources from one end to the another, right? It is also known as allocation function of the government, which attempts to provide certain goods and services which cannot be provided through the market mechanism, correct? Now what is tax, concession and subsidies, right? What kind of subsidies and what kind of taxes the government are going to implement this year on the industries. To encourage the investment, the government can give tax reduction to the producer. That is, for example, the government discourage the production of harmful by providing subsidies. Now let us understand, in order to prompt, what do you say, cottage industry and small scale industries, the government provide subsidies, right, so that their trade can be increased. And on the other hand, suppose if the industry is harming the society, their taxes would be generated high. You know that the taxes on the cigarette and alcohol is little higher than the other consumable items. This function is also known as distribution function, as the government alters the income distribution and make it a fair distribution, right? It makes a fair distribution. That is next one is directly producing goods and services. If the private sector does not take interest, the government directly undertake the uh, production activities, right? Now let us understand what are the components of budget. The two major components of budget are revenue budget. It deals with the revenue aspects of the government budget. It explains how the revenue is generated or collected. In short, it defines that how government is making money, right? Jokes apart, that whatever the taxes rates are laid on us, what kind of what are the proportionate taxes on that particular commodity. Then capital budget. Capital budget consists of capital receipts and payment. It also incorporate transactions in the public. That is what kind of capital budget the government is incurring or dealing with. Now the components of budget can also be categorized according to the receipt and expenditure on the basis of two components, that is budget receipt expenditure budget receipts and budget expenditure. Now let us understand what is budget receipt. Budget receipt refers to the estimated money of receipt of the government from all the sources. All the sources the government will collect, what kind of revenue is generated from all of them. The government is going to put a note or record of it. Now what are the sources of revenue? Right, revenue receipt of the government can generally be classified into tax revenue and non-tax revenue. Tax revenue, as you know, that is refers to the sum of receipt of all the tax and duties imposed by the government. Tax is compulsory payment, it is not optional. It is a compulsory payment made by the people and the companies of the government without the reference of any direct benefit in return. It means that there are two aspects of taxes. Tax is compulsory payment and there is no return, right? Tax receipts are spent by the government for common benefits. Now as you know, again the taxes are of two types. Number one is direct tax. They are imposed on property and income of individual and companies and are paid directly by the government. They are imposed on individuals and companies. The liability to pay the tax, actual burden of tax lie on the same person, that is income tax, wealth tax, right? Those who are liable to pay tax, they directly have to pay tax. In short, that's the reason the name is direct tax. Second one is indirect tax. It refers to those taxes which affect the income and the property of the individual and the companies through their consumption expenditure. That is VAT, GST, entertainment tax. If you consume, you need to have to pay tax, and those taxes are in form of indirect tax. Now quickly let us understand what are the components of capital budget. Capital budget, again I will be talking about capital receipts first. Capital receipts refers to those receipts which either create a liability or cause a reduction in the assets of the government. They are non recurring and non routine in nature, right? It is not occurring on frequent basis. The receipt must create a liability for the government. Borrowing are capital receipts as they lead to an increase in the liability of the government. However, tax received is not a capital receipt as it does not result in the creation of any of the liability. In case of, when I talk about capital receipts, it creates a liability, or it causes a kind of burden to the government. Now the receipt must cause a decrease in the asset receipts for scale of share of public enterprise is a capital receipt as it leads to reduction in the assets, right? Now let us understand capital receipts are broadly been classified into three parts, that is borrowings from where the borrowings are the fund raised to meet the excess expenditure, government, open market, Reserve Bank of India, foreign government, international institution. It means you are taking a loan and you are going to return them on uh, you know EMI basis, right? Then number 2 is recovery of loan. The government grants a various loan to state or union territory assets of the government. The debtor are the assets for the government. Recovery of loan causes a reduction in assets of the government, and it is also called as known debt creating capital receipts. What are the other receipts? Other receipts, it includes from the disinvestment. Disinvestment occur when the government sell off its public share to the private ones. That is called as disinvestment. It refers to the act of selling a part or a whole of shares of selection public sector undertaking held by the government. They are termed as capital receipt as they reduce the assets of the government. A part of the whole of its share, it leads to the transfer of ownership of public sector unit to the private enterprise. In short, they are selling off the assets just to make currency inflow more. The next one is a small saving, refers to fund raised from the public in the form of post office, that is Indira Vikas Kisan Patra, yeah, for national saving certificate. All these are treated as capital receipt. They they lead to an increase in the liability, right? With this, I end the session. In this session, we have discussed what is budget, features and objectives of budget, taxes, various kind of taxes, and capital receipts and capital payment. In case if you have any doubt, you let me know. Thank you.